Hi everyone, welcome to the weekly review of the NZSX50, where we take a look at the performance of the main indices on the New Zealand board, just to see how that's been performing. Remember, just the housekeeping, that this is definitely educational purposes only, certainly not intended to be personalised financial advice. For that, you do need to go and talk to your own financial advisor. So let's take a look and see how the NZX650 has performed for the week. Right, I've got it up here on the screen. Now I am recording this Monday afternoon, so the market is open, and you'll see here that this candle at the very end is the start of this week. And so far for the start of this week, it's up, which is great. Last week we saw the market close up for the week. It looked like it was a fairly solid week, so that was great. Not a lot of volume, so there's not a lot of shares and that being traded. And we do, for an upward trending market, we do want to see perhaps a little bit more volume than what we are seeing at the moment. You can see back here that there had been some good strong volumes, but not a lot at the moment. Let's just run our moving averages over and see how that's going. We'll run the 30-week moving average. Good sign there, it's above that. And we will also put on the 15-week. Right, as you can see here, that is good. We are still trading above both of those moving averages. You'll see that the share market is actually caught up to the 15-week moving average. So that can be a good sign. Who knows? Only time will actually tell us. But at this stage, it looks like it could have. I spoke a little while ago about having that line of support at around 12,800. Just looking at where it is at the moment, especially for today, the market is over there. We've actually gone into the 13,000 territory, and that is a good sign. Let's hope that can continue, and only time will really tell us that. But just to get an idea, let's see how it is over the 5 years. So at this stage, we are getting near where we were. The high that we had was back in 2021, back in January there, and you can only just see it. It's a very slight candle, but it looks like that sort of hit around the 13,600 mark. So we are getting a bit closer, which is great. In fact, just take it back to the 2 years. It is good to see that our market has been quite steady. It hasn't been an absolute stellar performer where we've been seeing huge runs on any particular shares or even our indices, but it is showing quite a steady run. So that is something that I believe is quite good. It generally tends to mean that it could be a little bit more stable rather than having big volatility and big swings and roundabouts. We'll also just take a look at how much volatility there is in the market. And so we'll take the average true range, which is 253.19, and we'll just divide it by where the market is at the moment. There's under 2% volatility. So that is certainly a good indicator for me. Now, if you're a regular watcher of my share trading signals that I send out, I haven't sent out any new buy signals for quite some time. And that's because the shares that we are seeing that are driving our market, we've pretty much got in our portfolio anyway at the moment. So that's why you'd be seeing that's sort of not being much action there. But for me, I'm quite happy. Let's watch the main indices here and see what happens. And who knows, we might start seeing some more participation from some of the other companies that makes up the index. So take care. Thursday, I am reviewing Auckland International Airport. So just remember, come back and have a look at that. And if there is any shares that you'd like me to review for you, drop me a note. Happy to do it. Okay, till then, take care.